All right. Well, thank you everyone for joining us here on our our current review of current franchise sales and marketing trends. And if you're new to this series or you haven't joined us in a little while, as a reminder, the focus and the overview of what we're going to cover, we're going to take a look at some macroeconomic data, and then we'll start getting to smaller and smaller and smaller micro economic data as we focus on broad macroeconomic indicators and then start looking at some small business and franchise indicators as well and talk about them and think and number one review them and then talk about how this might impact or be impacting some of your franchise sales and marketing efforts. Sometimes it's just making a change, sometimes it's just being aware, sometimes it's just letting your sales folks know these are things that are going on and just to be talking about with your respective franchise candidates. So, by way of introduction, my name is Tom DuFore. I'm the CEO of Big Sky Franchise Team, and this is one of my favorite things we do every month. We've been doing this for, I believe, a couple of years now. It's been quite some time that we've been doing this regularly, and I'm looking forward to going through this together with you. So, I am going to share my screen, and we are going to go through this information very quickly, and I will promise to try to have this done in less than 30 minutes. Typically, we have small groups. So if you're attending and you have some questions or some ideas that come up, just go ahead and type that into the chat box or the quick Q&A, and I should be able to see that and address it in the middle. And we will make sure to have some Q&A time toward the or right at the end of the session here as well. So let's go ahead and jump into this. I am going to share my screen. And let me see here. There we go. Okay, so this is the first chart that I like to take a look at, and this is the Purchasing Managers Index prepared by the Institute for Supply Management, and this is their current reading. And so this shows what purchasing managers are thinking about ordering. They call and survey these folks, or they do a survey with them. And it says PMI manufacturing at 48.4%. The US manufacturing sector contracted in December as the manufacturing PMI registered 48.4%, 0.6 percentage point below the reading of 49% recorded in November. This is the second month of contraction, and as predicted, will likely be the norm for the PMI at least through the first quarter of 2023, with the PMI expected to be between 48 and 52. Of the so what this is saying here, and you can see these lines if you look on this chart, 50% is the manufacturing break-even line, 48.7% is the overall economy break-even line. And so I think what's important to note here is, and by the way, why I start with manufacturing, it tends to be a leading indicator. So what's happening here may not be felt by the rest of the economy for several months. It might be 3 months, might be 6 months. It could be a year down the road before we actually see this in the broader economy as a whole. So what this is saying to me, with 2 quarters at below 50%, and now this is the first or 2 months below 50%, and the second month at under the overall economy break even, and PMI, the Purchasing Managers Index, predicting this hovering between 48 and 52%. What that says to me is that the economy is kind of going to be flat, leveling out. It might be right at break even, right below this kind of contraction and such. So things for you to talk about potentially with candidates as they're coming through, things for you to think about is, from a high level, what that says to me is that while the economy may not be booming, it's also not busting. So the high end may not be as high potential for growth, but the bottom falling out of the economy, it's what this is saying at 48 to 52% seems unlikely. So we may just have this flat. And that's kind of, by the way, my overall interpretation for most of this data as we go through this, that we're looking at maybe parts of 2023 or most of 23 is just kind of being relatively flat, not a whole lot of growth, not a whole lot of downside either. So that's manufacturing. Now we'll take a look at the Purchasing Managers Index by the Institute for Supply Management and take a look at the services industry. And so services really crashed hard here. And you can see in December. So it really fell down after it had jumped up. So in December, services PMI registered 49.6%, a 6.9 percentage point decrease compared to the November reading of 56.5%. And a reading above 50% indicates the services sector economy is generally expanding. Below 50% indicates that it is generally contracting. So the past relationship between services PMI and the overall economy indicates that services PMI for December corresponds to a 0.2% decrease in real gross domestic product on an annual basis. So I'm going to zoom in a little bit on this because this fell pretty quickly. As you can see, for 2022, the services really stayed kind of right about the same level, right around this mid 50s, 55-ish percent for most of 2022, and then just really crashed down in December here. So we'll see what happens. One slow down month is may not mean something. It may, but it's still worth noting that it fell pretty far. We'll see what the report comes out for the month of January as things come through. And then this is their newest report. This is the Hospital Purchasing Managers Index. And so this again, as you know, healthcare, services, healthcare, and manufacturing, these are all huge parts of the economy. So what these groupings are doing collectively have a significant impact on all of us. And so the PMI for a hospital is at 57%. So economic activity at the hospital subsector grew in December for the 31st consecutive month, say the nation's hospital supply executives in the latest hospital ISM report on business. The hospital PMI registered 57% in December, a 0.5 percentage point decrease from the November reading of 57.5%. So you can see here that I'm going to zoom in on this hospital a little bit, but I just want to point out that you can see the hospital has kind of been zigzagging. It's been all over the place, kind of like a yo-yo. And it really started at the beginning of 2022. So almost exactly a year ago, January was fine. And then bam, it really fell down in February. And it's kind of been doing this zigzag back and forth. And to me, part of that is my interpretation on it is just part of what we've seen happening with COVID spending, government stimulus, a lot of these factors that may have been playing into it as the hospital and healthcare systems are starting to kind of come back to, I don't want to call it an equilibrium, but kind of a pre-COVID kind of a world where COVID's still out there, but it's not the same extreme as we've seen in the past. And by way of example, I'll show you here that we have these. This shows daily new cases for COVID. This is from the Worldometer's coronavirus for the United States, and it shows daily new cases right now. 7-day moving average at 43,500, and total number of deaths here is at, let me see here, the rolling is at 365 for the 7-day rolling average. So you can see the deaths for COVID, which is great to see that really level off and be very low for many, many, many months. So just some food for thought for you all there as we're taking a look at that, just to add into some additional information. This is the unemployment rate that's listed at tradingeconomics.com. This is the U.S. unemployment rate. Now, I didn't see the numbers updated here. So we have October, we have at 3.7, we have November at 3.6, and then we have December, the December unemployment rate at 3.5%. So it kept dropping. We'll see what happens in January for potential seasonal and temporary workers that oftentimes are hired for the influx for Christmas shopping and so on for that time of year. So we'll see what happens in January. But again, this is all leading, pointing to a very tight labor market, which I'm going to show you here. I'm going to add a little color to the labor market here. So this is from the U.S. Chamber of Commerce, some data that they put together. And so really the biggest complaint I've been, maybe I don't want to say complaint, challenge I'm hearing from small business owners is staffing and being able to find quality staff. And not only just to find staff, retain staff, keep quality staff, just it's hard to find people. And part of the challenge is that when you look at this statistic here, I find this really interesting. Labor force participation rate, okay, as compared to pre-COVID. So if we were to look at the labor force in February of 2020, in order to get back to that same number of people participating in the labor force, we would need to add almost 3 million workers. So you wonder where that labor pinch is coming from and why. I don't know for you. In my community, I drive around or you'd see help wanted ads everywhere. You see job boards. Lots of job opportunities are available. So almost 3 million people out of that are just not in the workforce anymore. They're just not working. So that's part of pinch that we're feeling. So just something for you to be talking about with your franchisees as they start thinking about it, right? You might want to be explaining to them, you want to start recruiting for a manager, recruiting for some staff early and often, keep those job ads running and keep a steady flow of candidates coming through. Here's an example of total number of job openings and where there are unfilled job openings. So these you see these yellow positions, these are filled positions, and then this dark colored figure or little stick guy there is unfilled jobs. So durable goods is only at about less than 40% staffed, means over 60% unstaffed. Wholesale and retail trade looks like about 40%. Financial activity is about 50% understaffed. Professional and business services is showing about, look, what is that? 60, just over 60%. Leisure and hospitality, right about 50%. So if you're feeling that pinch in your business, just something for you to be aware of and be talking about with franchisees that, my suggestion in these scenarios is that this is a macro issue. You're not going to be able to solve this greater problem as a whole. However, you can have a plan for how to overcome the challenge that exists. So communicating to your prospects that you have a plan is as valuable as if there were an abundance of workers looking for jobs right now for your type of a business. So keep that in mind as you're going through this and thinking about it, especially if you're in a business that's been operating, maybe you're in a business that's been operating 5, 10, 15 years, and you have a stable workforce because you've worked through and have had some great staff. When your franchisees are starting, they're going to be brand new to this. So just wanted to add some additional color to this labor challenge here. Let's see, U.S. inflation rate for December was at 6.5%. So we see this starting to subdue. And remember, this was 6.5% over last December, which we saw big spike. So it's like 6.5% on top of the year before. So if we go to 5 years, where was it? January of last year. This was at almost 8% inflation in January of last year, and then another. I'm sorry, we're looking at December. This was at, still over 7% in December of last year. And we're seeing another 6.5% over that in December. So continuing to see that compound. What does this mean? Well, for your franchisees, I would be saying they need to be making sure that they're reviewing their pricing and reviewing their cost of goods sold and labor costs, especially, to make sure that their pricing is keeping that profit margin where it needs to be, and that as a franchisor, make sure you're reviewing your investment charts, your item 7, to see what's going on, to make sure that all of those expenses are current, or that the investment range still accounts for some of that growth, especially now as we're coming into the season of FDD renewals. So this is the consumer sentiment that's put out by the University of Michigan. So this is the consumer sentiment survey of consumers, index of consumer sentiment. So it's showing for January of 2023. These are preliminary results. December is in at 59.7. December of 22 is 59.7. So we're showing January at 64.6. So we're seeing a month-to-month change of plus 8.2%, year-over-year change, it's down 3.9%. What I think is nice to see is this current economic conditions. So we hear, in the news headlines seem to indicate questionable situation on the economy. The consumer sentiment's reading a 15.5% increase month over month, January over December. So that's pretty significant in terms of current economic conditions. It's down 4.7% year over year right now. And then the index of consumer expectations, that is up for month over month, and it is down slightly down 3.3% year over year. All things considered, I really like seeing the sentiment bouncing back up here and showing a good sign of starting to come back up. You can see on this chart down here that it hopefully had bottomed out here. It was at the lowest it had been in over 30 years. You can see how low that consumer sentiment was. So we're starting to see that come back here at this point, which is good. New business formations. The chart for December hasn't come out. It says it's supposed to be out by now. So maybe later today it'll come out, or Monday or Tuesday, but it was not out. So this is showing the new business application. So for those of you recruiting new franchisees, what has just been mind-blowing to me is the number of new business startups happening across the country. It has consistently been at or over 400,000 new business applications every single month since I think that was right around August or so of 2020. So we saw a dip when in March, when the COVID shutdowns and situations started happening, and we saw a big spike in new business applications. So what that says to me, I've said this before if you've tuned in, is that while all of these people are not buying franchises, because they're not. A small percentage of them will be. But what it does say is that a lot of people are starting businesses. And if you look at pre-COVID here, it was just steadily growing from 2011, from about 200,000 applications over about almost a 10-year period. It grew to about 300,000. And what we can see here, and I see a question here. Hold on one second. I'm just going to finish this thought and I'll get right to you. From 200,000 to 300,000, then bam, this huge spike up to over 400,000 folks here. So just some food for thought. What this says to me is that people are thinking about taking control of their own destiny to be their own boss. And so making sure you're reiterating that in your messaging is going to be important. Be your own boss, be the captain of your own ship, take control of your destiny, whatever that might be. I think people want to feel like they have some kind of control of something in their life. They can control their own small business. So they're thinking about that. So we have a quick question here. I'm going to go ahead and unmute you for a second. I'm not quite certain how to say your name, but go ahead. I just allowed you to talk if you want to unmute yourself.
Yes.
Yes. Hi there. You have a quick question?
Yeah, I have a quick question. I in the process of deciding whether I should go after franchise, become a franchisee, or start on my own. And I wonder if you have the magic pill right here.
Sure. Well, I would say I don't have a specific answer for you on that, but if you want to hang on after our session today, I'd be happy to talk a little more specifically to try to better understand your specific situation, if you're okay with that.
Yes, I like that very much. Thank you. I'll do that.
You're welcome. Yeah. Great question. Okay, so tying into this, by the way, into these new business applications is uh we did this one. What I want to show you, uh, here it is. Okay, so this just came out a couple weeks ago by Franchise Insights, which is by owned by Franchise Ventures, and they combine all of their data and they do these primary motivations for franchise ownership, and they review and interview prospective franchise buyers, and they say, what's driving you to want to buy a franchise or be your own boss? What's driving you to own your own business? Getting back to this chart here, look at this, over 400,000. Well, here's what the numbers say. Okay, and this to me is always fascinating. And by the way, these numbers have been consistent. The number one has been consistently number one for as long as they've been doing this. And people in franchising anecdotally understand that this is what we know. When you've been in franchising for a while, people want to be their own boss. That's what they're driving at. But if there's ever a question, by the way, in terms of what does the current data say, this is as fresh and as current as you are ever going to get on this. Top drivers for wanting to own your own business in Q4 of 2022, 87.4% indicated that being my own boss is 87.4% of that checked the box and said, I want to be my own boss. And you can see it's number one by a long shot. Number two is income potential, about 66% or so. So about 2 out of every 3 said income potential. So certainly that would make sense, right? They're maybe trying to earn a certain level. And then about half indicated lifestyle rewards. They're looking for some kind of lifestyle benefit or gain out of it. Side business to supplement income, almost half, or tired of climbing the corporate ladder, about a third of folks did. But if you're going to error anywhere in any of your marketing, any of your messaging, any of your sales presentations, this is what you want to be connecting to, is that you want to be your own boss and having that conversation and reminding people that they want to be their own boss. So I think that this is significant for you to be focused on. I talk about this a lot, and it's just that I don't see it as often in continued franchise marketing or in franchise sales presentation. So just as a reminder, when in doubt, go back to the candidate and ask them when you're talking to them at every stage of the sales process. By the way, just as a reminder, I remember Mr. or Mrs. Smith, when we spoke back a couple months ago, you said you were interested in opening a business for these reasons. Is this still why you were thinking? You know, you mentioned you wanted to be your own boss. Is that something that still resonates with you? Oh, yeah. Well, let me tell you how our franchise can help you be your own boss. Let me share with you how we can. And then you talk about how your franchise opportunity can solve that problem for them. Their problem is they want to be their own boss, but they're not. And your franchise is a solution. Anyway, I love this one. I get excited about it. So, all right, now let's take a look at the Small Business Startup Sentiment Index. This was released January 4th of 2023. I love this headline. Despite worsening conditions, record share of entrepreneurs see startups within 2023. A record 91.4% see starting their business in 2023, and funding is seen as the biggest decision factor as pandemic recedes from worries. So we're going to scroll down here. Look at more respondents agree now is still a good time for startup. So we look at this right now. So we're saying, looking at people who agree or strongly agree that right now is a good time for startup. 59.1% of people are thinking that right now is a good time for startup. What does that mean? Well, that means if you're talking to candidates, they're thinking about starting their business today, tomorrow, next week, right now, or they're thinking about doing so over the next maybe couple weeks, couple months. So be talking about the present when you're speaking with them. That would be my suggestion to you, talking about the present and how that can be, and how that is right there. Let's take a look down at franchise concerns. What let me see here. It's just down a little bit farther. Here we go. Okay. These are the drivers as to what franchise or what prospective business owners, what they're most concerned about. And as you look at this chart, this is from December of 2022. You can see that the number one is on this far left side, and you've got all these months before in these different colors, but the current is in this black line on the far right side. And you can see that 67.7% of all respondents, so 2 out of 3, said that credit or access to funding is their number one concern or biggest factor into starting a business. So if you have any way to create a solution to provide funding, third-party lenders there are lots of great franchise uh, uh, brokerage and franchise lending groups that exist out there. I'm happy to share several with you. I don't have a magic list. It's most, if you've been in franchising, that you're probably familiar with. Companies like Guidant and Fran Fund and Tenet Financial and many others like them that have been around for a while and help provide franchise financing in various ways to candidates. If you don't have a relationship with a group like that or a bank, I encourage you to look at building that out. 40.9% is economic climate. So you see the economic climate is starting to grow back up. It had been growing and then it dropped and now it's kind of trending upward again. Those are the two biggest. So the information we're talking about here today should hopefully help you address economic climate and being able to not, again, the point when we're talking about the economy is to not say it isn't a problem or that it doesn't exist, because person on the other end of the line knows it exists, and the severity of it is interpreted by that person. So however severe or unsevere they think it is, or you think it is, doesn't really matter. What matters most is that your franchise opportunity and your franchise system can provide to them a solution to the challenge that exists. So that is what you need to focus on. Here's an issue. We recognize that you may be worried. You might have a conversation with the candidates. So it sounds something like this. You may be worried about the current economic climate with rising interest rates, with inflation, with these other factors going on, but we have a plan. Our plan is fill in the blank. And by the way, knowing that most of these company prospects here, back to the top, I'm scrolling back to the top of this list here, where it talked about that the 59.1% think that now is a good time for startup. Okay. So that means that about 60% of your prospects are saying now is the right time. Well, reminding them that now is a good time just for the sake of tying in the inflation and rising interest rates. Every day they wait, money becomes more expensive. It's this double whammy we've talked about for many months now. You have rising interest rates, which means it costs more to borrow, and the devaluing of your money or their money. So every day they wait, the dollar they have today is worth less. And it costs more to borrow money that's going to be worth less. So the point is that if they are serious about it, and you don't want to have this sound like you're forcing them into this, because that's never the goal. We don't want to have them feel forced into buying a franchise. Goodness gracious, don't want that to happen. But if they are convinced that they do want to buy your franchise, encouraging them to move more rapidly every 30 days that passes is another 30 days of interest rates potentially going up, of inflation continuing to grow. So they would want to do that. Not to mention, I think we are seeing some of the, I don't have a chart here to talk about supply or inventory, and those things starting to stabilize a little bit, but still the supply chain still has some lags in it. And so depending on your business or industry, that could impact it. One of my favorite charts that I always like to talk about before we go is what are the most active franchise categories. So this is a really cool chart that Franchise Insights puts together. The following franchise categories showed the greatest inquiries on the Franchise Ventures platform of websites and mobile apps in the last 90 days. So let's take a look at the leaders. Home services is currently number one, and this has gone up since the last time we looked at it. It was at 18 something, I believe. Now it's up at 19.6%. So we're seeing home services bump up. Senior and healthcare is number two. Business services at number three. Cleaning and maintenance at number 4. Food and restaurant at number 5. Child related at 6. Education at 7. Financial services at 8. Retail at 9. Health and fitness at number 10, rounding out our top 10 categories. So if your franchise falls into one of these categories, the good news is this is where more people have inquired about your franchise type than any other. If you're not, maybe you're in one of the fastest growing here. So you see food and restaurants actually at the fastest growing, 270% increase. Automotive, personal and staffing, or personnel and staffing, retail, health and fitness, computer and internet, pet services, home services, child related, and financial services are the top 10 growth categories for franchise inquiries. And then lastly here, I just thought it'd be interesting to show what the predictions are by Franchise Insights for what's coming down the pipeline, what they see in terms of what's happening. So their 3 issues are: privacy issues are going to be paramount. So there are 3 issues for 2023 predictions for franchise recruitment and marketing. Privacy issues will be paramount. Targeting capabilities are going to be further diminished, and Gen Z prospects will continue to grow. So I think this is worth noting. You can see Gen Z in this far right column. It was at 2.6% of inquiries in 2020, 2.46% in 2021, and 3.29% in 2022. Your largest share currently, and is right around half of all franchise prospects, is Gen X, followed in second by millennials, hovering right around 30% of buyers. Then you have baby boomers, which continues to kind of slowly decline. That's somewhere around 16 to 18%. And then you've got Gen Z making up the balance there. And the silent generation, which was born before 1946, is part of that mix as well at less than 1%. So this is in terms of demographics, what you're looking at in terms of franchise candidates. And so with that, I would, one last piece I thought was interesting. Franchise Insights had just a ton of great data this past month to share. They talked about where franchise advertising and targeting and use of TikTok. So this is the average time spent per day by US adults on select social media. TikTok is the number 1 at 45.8 minutes, YouTube 45.6 minutes, Twitter 34.8, Snapchat 30.4, Facebook 30.1, Instagram 30.1, Reddit 23.8. This was over 2022. And so with the growing trend of Gen Z in the franchise market space, it's worth noting to see, how do you maybe incorporate TikTok into some of your franchise lead generation? I would say I am not terribly familiar with this or in that avenue, but it is still worth noting. And so that is my presentation today. Hopefully you were able to gather some information and insight. Thank you for those of you who stuck around here. And I'd love to just open things up for some questions, comments, ideas for discussion before we adjourn for the afternoon. Feel free to raise your hand or type in a chat or question and answer box here. All right. Well, thank you all for being here. One quick thing before we go. If you have not subscribed to our podcast, check out Multiply Your Success on any of your favorite podcast apps. Take a look there. This week's episode was an excellent episode where we interviewed a franchisor that I worked with several years ago who went from 0 franchises to now over 70 franchises open or sold. He's got about 60 some open and another 10 or so sold that are in development, and how he's growing a national franchise system. So he has a great story to share if you're interested in kind of hearing a little bit more about his journey. His name is Rich Peter, And the podcast, again, is called Multiply Your Success. If you haven't subscribed, we'd love to have you do that. And we will have this posted as a recording. If you found value and want to share this with someone you know or think someone on your team might gain benefit from it, we will have this published next week up on our YouTube channel, and it'll be available on our blog as well on our website. Thanks for tuning in. Again, my name's Tom DuFore with Big Sky Franchise Team. Really appreciate your time, and we look forward to having you back on the same program here that we do every month. So we'll see you back in February. Take care. Thanks, everyone.